And welcome to Dollars and Making Sense, a weekly program about finance, money, and investing. I'm your host, Ray Treverson from OTG Capital, and we broadcast weekly on Radio Northern Beaches and nationally on the Community Radio Network. And we're really pleased to welcome back to the microphone Neville Birthisel from the Institute of Financial Professionals of Australia. Now, Neville, you've got to be impressed. I'm getting the IFPA routine down really well now, aren't I?
Going very well, Ray.
Good. Now, before we get started on today, the marketing manager from IFPA asked me to remind you and all the listeners that, ladies and gentlemen, we are chatting to the Non-Profit Accountant of the Year awarded at the Australian Accounting Awards recently. So congratulations, Neville.
Thank you very much. It was quite a surprise.
Wonderful. And I'm sure well-deserved. So, ladies and gents, it's always great to have a subject matter expert on the show. And today, we're picking up on something, Neville, you and I recently talked about director information numbers, which is probably old hat now when you think about it. I think about that particular conversation and that we all now, as directors of companies, have to have a number. And that has a big impact, not so much in normal day-to-day company activities, but it also has a lot of impact in corporate trustee land for SMSF trustees. So even though people don't run companies, if they have their own SMSF, DINs have become a big thing. So DINs, Director Information Numbers. So ladies and gents, go back to the blog. We're not going to go over that. But your last show, Neville, we were talking about work from home tax considerations. And during COVID, it was pretty good, wasn't it?
It certainly was. I mean, the concessions that the tax office provided, the shortcut method of 80 cents was fantastic. Unfortunately, as we said in the previous show, that ended on the 30th of June, 2022. There is another concession available, which is 67 cents, so not quite as good as 80 cents. And in the previous show, we discussed the winners and losers out of that.
Now, today we're talking about land tax. And I got to say, ladies and gents, when Neville sent me through the background reading, I was a bit overwhelmed. And we're talking now, and I think it's really important to understand that we're talking now about state-based legislature. And because we live in this wonderful constitution of the Commonwealth of Australia, we are privy to 6 states and 2 territories. And each and every one of these jurisdictions has a different way of approaching land tax and work from home. Now, Neville, you've gone through all of these bits of legislation with a fine-tooth comb, and I guess I'd like your overall view. What's your general summation from IFPA's perspective?
People may be thinking that 67 cents is not as good as 80, but I'm still working from home. I'll just claim that. At least I don't have anything else to worry about. Unfortunately, there are other things you need to worry about, particularly if you're working from your home. If you're just renting, don't worry about it. It's all good. But if you're working from your home, there may be impacts of a land tax nature where you have a business or are an employee working from a office or studying in your home.
This is quite a I guess it's a divergence when given the fact that people have looked at work from home as this revelation of being able to get more time for themselves, be around their family, not be on the roads. And so I think government's probably looking at this going, hey, there are so many upsides here, less cars on the road, less pollution, less stress. People are happier in their work life because they're going into the office, but they're also having this balance. So this thing that we talked about, 20, 30 years ago when I first started working in telecommunications and people were talking about, hey, we're going to be all these wonderful things. We're here, but now all of a sudden government seems to be punishing us for it.
Well, to be fair, most of the legislation around the country has been in well before COVID. But thinking about before COVID, there weren't that many people working from home. So, and not necessarily state and territory budgets didn't look as bad as they currently do. So there may not have been the impetus to get out there and look at what was available under these legislation to get more revenue from the states and territories.
But Neville, when we look at land tax and in the scope of materiality, and that's an accounting term, ladies and gentlemen, materiality, I guess to cut a long story short, it's all about, is it worth chasing? I mean, are we really talking about a lot of revenue here, Neville, or are we really just scraping the bottom of the revenue barrel here in chasing people down on land tax around their work from home?
Well, I guess pre-COVID, I would have said, yes, you're scraping the bottom of the barrel. Is it really worth it? But then if you extrapolate that across the amount of people who are now working from home, it may suddenly become a worthwhile venture.
So some of the bean counters in the various state treasury departments have scratched their heads, gone and done their numbers, and gone back to their masters and said, "Hey, this policy is worth a bit of a shake because we can actually, shake our taxpayers a bit, and some coins are actually going to fall out."
Absolutely.
So one of the things that I guess from an educative perspective, and that's what Dollars Making Sense is all about, we're trying to educate people. Let's have a look at, the basic principles. What are we talking about here? What are the governments actually trying to do here with these land tax reforms?
So the land tax provisions, and similar to the capital gains tax provisions, your main residence is exempt. That's the starting point. And in the land tax, it's called your principal place of residence exemption, and that is common between the states and territories. However, if you have a business from home, or in some jurisdictions, even if you're simply working from home as an employee, that may erode your exemption. So suddenly you are needing to pay land tax on your home.
So the PPR, so the principal place of residence, and I'm using a TLA there. My apologies, but PPR is good for the rest of the show. So the PPR, all of a sudden now, is no longer sacrosanct because we are carrying out employment duties in our place of home.
Yeah, exactly. To give you an example, looking at Victoria, which is close to my heart, Victoria has two parts to it. So firstly, they have this notion of substantial business activity, and the word substantial stands out because that can mean different things to different people. They have a number of indicators as to what would indicate that you have a substantial business activity. One is where you're using more than 30% of the land area for the business. Another one is where you have more than $30,000 gross turnover from the business. Now, I'm not sure many businesses would consider that they have a substantial business activity at $30,000 of gross revenue.
I think it's worthy to note at this point as well, though, Neville, that the GST limit is 70,000 or 75,000. 75,000. So, that's almost half or under half now. The state government is now coming in and saying, the federal government says 75 grand and you don't have to worry about GST, but at 30 grand, you have to worry about land tax. It's a bit of a misnomer, don't you think?
Yes, absolutely. To give you a real life example, I know of somebody who has a business from home. They have no employees, which is one of the criteria. They do have an area set aside in the home. They use 5% of the land area for the business. Their turnover in the year of assessment was $36,000. And the only other requirement that meets the ruling from the state commissioner is that they need local council permission to run it. Even on that, they were considered to have a substantial business activity and are now subject to land tax assessments on their main residence.
And I guess so let's talk specifics now. In this particular example that you've quoted, so we've got $36,000 of revenue. Is that land tax now looking at that $36,000, or is it looking at the base value of the piece of real estate that they're operating the business out of?
It's looking at the percentage of floor area for the business compared to the total floor area of the premises.
Right.
One over the other, multiplied by the value of the land.
Oh no!
Times the land tax rate.
My word! And when you consider what homes cost, even in Victorian rural areas, that could end up basically saying to people, don't bother operating from home because we're going to end up slugging you more in land tax than you're going to end up in paying in normal income tax.
Exactly, especially when you consider how housing prices rose during COVID.
Yeah, and look, I've got a good friend. We occasionally go down. I go down to country Victoria, and for those of you that are outside of Victoria, and given that this is a national show, people often talk about tree changes and the cost of real estate in Sydney and Melbourne. But there's a place in northeastern Victoria called Bright. Now, pop your head into that place. The average price of a house in Bright these days is over $3 million. So if you're sitting, and it's what, 2.5, almost 3 hours drive from Melbourne, and I'm there scratching my head. Even a house in Albury now and Wodonga is well over $1 to $1.5 million. These aren't cheap places of abode anymore. And if you are being slugged a land tax in I guess, ad valorem to the value of the property that you're on, there's no escape.
Exactly. Looking further at the Victorian legislation to give an even more draconian viewpoint, take the situation you're not carrying on a business, you haven't got the hairdressing salon at the front of the home, or you're not running a podcast business from home or something like that.
Oh, is that me? Quick, they're coming to get me.
Simply, if you are an employee who is now working from home partly or entirely as a result of COVID, the Victorian land tax provision says that where you undertake most of your work at your employer's business and you use a home office to complete work related to that business from time to time, then it's unlikely that you're going to impact your PPR exemption. Okay, but flip that around. If you do most of your work at home, let's say 60-40, 3 days a week at home, and you have in your office at home, don't you therefore have an impact upon your PPR exemption?
One would suggest, yes.
Yeah, the ruling doesn't give the counterfactual, but that would be the logical conclusion. And that's just simply for employees working from home who are not conducting a business at home.
Well, I'm going to base a question back to you, Neville, in just a moment. It's just time now for a break. You're here on Dollars and Making Sense. I'm here with Neville Birthisel from IFPA, the Institute of Financial Professionals Australia. We'll be back in just a moment. Hi, and thank you for listening to Dollars and Making Sense, a weekly radio program about finance, money, and investing on Radio Northern Beaches and nationally on the Community Radio Network around Australia. The views, comments, and opinions aired during our program should not be construed or viewed as financial advice. Any commentary is general advice only and does not take into account your objectives, financial situation, or needs. You should consider whether the advice is suitable for you and your personal circumstances. If in doubt, you should contact an authorised licensed financial planner. We welcome questions and feedback, and you can get in touch with us via our blog, social media channels, or email. Please search for Dollars and Making Sense in your favourite podcast platform or check out our blog at otgcapital.com.au/blog. And welcome back, ladies and gentlemen, to Dollars and Making Sense. I'm your host, Ray Treverson, and at the microphone today we have Neville Birthisel from the Institute of Financial Professionals Australia, and we are talking about this insidious land tax around work from home provisions. Now, before we went to the break, we were talking about the Victorian situation, and given that we have 6 states and 2 territories, we're going to cover off a few of these. But I think one of the things, Neville, you've been talking to groups of tax professionals. There have been some issues that have come up in those discussions around this particular subject. Maybe it'd be good for the listeners to have a bit of a peek into some of those inside discussions.
Certainly. Firstly, there's a great lack of knowledge around this area. So many people were surprised that these regulations and laws even existed. The other comment that came up was, well, what happens if I simply don't tell the State Revenue Office about my situation? which which firstly, of course, amounts to evasion, which is never good. But secondly, in the case where you have to get a council permit, there's an audit trail. Of course, if you're conducting a business from home, you should be filling out a business schedule in your tax return every year, which has your address as part of the schedule as to where the business is being conducted. So the ATO know that you have a business at this premises, and also that that premises is your home.
It's called data matching, ladies and
So,
gentlemen, data matching.
and the ATO is getting better and better at it every day.
Oh,
So
yeah, they certainly are.
to simply stick your head in the sand is quite naive.
And I guess from a professional's perspective, these tax agents, because they are knowledgeable in the law, and you and I are both licensed in this field, for us not to advise people accordingly then makes us criminally liable as well, doesn't it?
That's right.
So it's never in anybody's interest. I guess the best thing is to address it. But Neville, we're talking about some pretty draconian bits of legislation, which I guess just really surprises me. We were talking before we went to break that working from home is something we should be celebrating, not punishing. So I guess it's a little bit of a quandary. Now, we were going to talk about Tasmania as well. So maybe give us a bit of a view of the world from Tassie in comparison to Victoria.
Certainly. So Tassie is basically Victoria's Antichrist, or perhaps Victoria is the Antichrist, depending on your point of view. But in Tassie, if a qualifying home business is conducted at the owner's home, land tax will not be payable on the portion of the property from which the home business is operated in most circumstances. So
It's the exact opposite to Victoria.
Absolutely. They said, come on down, do whatever you like. This is fantastic. More productivity, more business enterprise. This is a wonderful thing. So they are very civilized.
Yeah, I got to say, look, one of the things I say to people often, the power of one, you may think is not powerful, but I think it is. And look, I'm here local. This show goes out to Radio Northern Beaches, and I actually patrol at Bilgola, my local beach, Surf Life Saving. Now, before the last election, Jason Felinski, our local member, used to visit our surf club all the time. He used to hate seeing me because I write to him all the time. And ladies and gentlemen, I think, Neville, the message needs to go out. If you don't like this legislation, you need to write to your state MP and let them know, this is anti-business. I'm staggered, really, that this kind of policy would come out. That the upsides are really, really strong to encourage people, merely, I guess, purely from a quality of life perspective. I mean, you can see from my background, I work from home. I've been working from home since, 1998. So when COVID came along, it was no different to me. But the idea that all of a sudden it becomes a burden. I mean, I have a serviced office and I do client meetings and a whole range of reasons. So I live between here and a whole range of other places. But COVID taught us a whole range of really cool skills. I just don't get it. So I guess Tassie's the opposite. Are there other state legislatures, Neville, that really stand out as being good or bad in your review of this legislation across the country?
Jurisdictions, apart from the Northern Territory, have legislation.
Mm-hmm.
None are by any means as draconian as Victoria. In most cases, you're pretty much going to be okay, but you need to consider your individual circumstances. South Australia is fantastic in its simplicity because it has a table that says if you're using more than 75% of the land area, you have a problem. If you're using less than 25%, you don't have a problem.
Mm-hmm.
And there's a sliding scale between 25 and 75%. So it's very clear.
I'm seeing the guidelines here. I'm just reading some of them. And so South Australia, your comment here, has by far the clearest guidelines, and they provide a table. So there are sliding scales in different jurisdictions for the level of percentage of use and then that impact, I guess. So that's what people really have to do. So I guess, again, from an education perspective, what's your recommendation to our listeners who do work from home or do operate a small business from home, hearing what they're hearing now? I mean, is there reason to panic, or is it just a matter of take a big breath. It's manageable, and other than if you're living in Victoria, by the sounds of things. But let's talk about what's the next step, I guess, for people to start addressing this concern.
Yeah, I was going to say, if you live in Victoria, panic. If you live elsewhere around Australia, be aware of it.
Right.
Go onto the website of your state revenue office, have a look at the rulings on there and what indicators there are as to whether or not you have a problem. And of course, speak to your tax advisor on the issues and get their thoughts on it as well.
So let's talk timing. From a timing perspective, when have these already been legislated, or are they forecast to come in?
No, most of this has been in for a very long time. I think Victoria's, if memory serves, was around 2010, 2011. But as I said earlier, with pre-COVID, very few people actually working from home. State budgets were in a reasonable position, therefore there was no impetus to go out there and pursue this. Whereas now there is.
It's fascinating to me then. And I try not to get into politics at all, but if you're saying this legislation in Victoria came back in 2010, was it, which side of politics actually brought it in? Was it Labor or was it Liberal?
Now you're
Don't know.
switching on. Now
Okay.
I'm going to take a guess and say Labor,
Okay.
but don't hold me to that.
Okay, well, I think it's something worth looking at because, again, it would be stunning if it was the Libs, because they keep saying, we're pro-business, and I hope so. I guess, my overall feeling right now when I look at this is just it's so anti-innovation, because the whole idea, I mean, you and I, for example, we're recording this show today over an internet video conferencing, which we all now nickname it Zoom. We're not actually using Zoom, we using a different product, but the basis of being able to use information technology to leverage all these great benefits we were talking about, and the opportunity to not have to hop in a car and do this awful commute. Because I don't know about you, Neville, I mean, I live right up in the Northern Beaches, and I used to travel into the city. I used to hate it. I hated it so much. I used to spend 2.5 hours a day in a car, and yeah, I used to listen to music and occasionally or whatever, but it used to drive me insane. And so I look at this land tax, and it's saying to everybody, hate you working at home, go back into the office. So I'm just wondering if this is a clandestine policy initiative by all the commercial real estate owners around the country to say, let's get people back into the office. I tell you what, it's not a bad way of doing it.
I've had the same thought, yes.
I mean, it's one of those fascinating elements, I guess, from the perspective that um, if we're talking about a tax that is associated with the value of the home, are there ways that people are going to be able to minimize this tax or avoid it? Or is it something that they're just simply going to have to either pay it or end up hopping in a car and going back to the office?
I think firstly, knowledge is power. So find out exactly what is the rules in your jurisdiction and how do those rules apply to your situation, and do you tick the boxes or not? Obviously, if or not, then you're okay. If you tick the boxes, then really start thinking about your personal situation, and as I said earlier, talk to your advisor about it and understand what is best for your circumstance.
The final, I guess, tax consideration is that if the PPR exemption starts being impacted from a land tax perspective, does this have ramifications at a higher level when you actually dispose of the asset? So when you sell your home and you've been operating your business from that, will that have an impact on that sale?
There are federal laws around, obviously, around capital gains tax and the use of your main residence as a place of business. Section 118, 190.
Wow,
Not,
you
not,
know the
not,
section too.
not to be a tax nerd, but of
Sorry,
the
you
non
are a
of
tax nerd. Neville, you just proved you're a tax nerd. Sorry, mate.
So yeah, that the rules are somewhat different. The boxes to be ticked are somewhat different. again, you need to speak to your advisor about that. And if you're in that situation, consider whether it is a problem for you.
Wonderful. Well, look, we're just about out of time, Neville. Fascinating again. I got to say, this has been a real education, which is what we're all about. But I didn't expect to find these. I mean, wow, there's some real booby traps there for sure. And I guess the bottom line is, Neville, we say to our listeners, get and seek professional advice if you're not sure. So, Neville Birthisel from the Institute of Financial Professionals of Australia, thank you so kindly for joining us this week.
Been a pleasure, Ray. Thank you.
Always. And from Dollars and Making Sense, until next time, it's adios.